Everybody, it's Omar. It is February 11th, 2018, 7:37 p.m. in the evening, and I want to make a video about my watch list. So, I'm not real good with social media, and I have my YouTube page, and you can kind of check the stats. I didn't know you can do that, and then I saw like apparently people on average watch my videos like at the most like 10 minutes. So I'm not gonna make videos building the watch list. I'm just gonna have the stocks already set because I can't keep people's attention span more than 10 minutes apparently. So so what's the point of making these videos long if people are on average are not gonna watch them? So what I did was I took the liberty of building my watch list tomorrow. Now I'll tell you this: I'm not particularly excited about anything. I mean, we're like, I think if you follow me back in mid-January, January 15th to be exact, I had said that my expectation was that at some point this year, this market was gonna turn into a bear market. I don't know. I just thought the stocks were parabolic, and I just had this inkling that things were gonna just turn. So nobody knows. I mean, who knows? Tomorrow we start another bull run. We go to 4,000 Dow. Who the hell knows? But my guess, right? Because nobody knows. Nobody in the world knows what's really gonna happen. But my guess is we're in the beginning of a real bear market. I think the Dow, my guess, will be below 20,000 in the next 60 days. I think that's what's going to happen. And I wouldn't be surprised to see this Dow by the end of the year, or be below 16,000, maybe even 15,000. I mean, it sounds crazy, sounds far-fetched. I could be completely off, but that's what I'm thinking. There's like several variables why I think that's the case. I'm not no forecaster or analyst. I just go by just by my common sense and what I see and what I live, and see how people are living and see what's going on. I just think we're in the beginning of a really ugly bear market. That's why it's good to long and know how to short. I love shorting, so for me it's fantastic. But you're not gonna see, if I'm right, you're not gonna see the crazy parabolics that you've been seeing over the last several years. Those days may be over, but maybe not. Maybe tomorrow the Dow goes crazy and we just go on another run. We'll see. So these are the stocks that I added on my watch list. Talk about the first one, IMGN. So this had a green day Friday. It was up Friday, 3.6 million shares traded. Its average is 3 million shares traded. Kind of like tanked on Friday, went from 9 to 7, so it has some good range. And then it bounced from 7. I think the SPY went up, so that's the Standard and Poor's. So that trades along with the 500 listed stocks on the stock exchange. So when the Dow went up, a lot of these stocks went up, but it was crazy bounce. So it went from 775 all the way back up to 888. Now I think you could potentially take it long if it breaks and holds above the high here, which was 88901. But to me, the key level to look at this is if it gets around this 918 level, because I've traded this stock a million times. Every time it bounces and it gets close to that $9 to $10 range, the stock just completely tanks like you see here. I mean, it's just fantastic for shorting, and it's easy to borrow. So I don't know what's going to happen tomorrow, but if it gets up close to that, and you see this is a 10-day 30-minute chart, just so you can see, I want to see it get around to this range, and if it can break and hold, then I'll take it long. But if it gets to this level and doesn't hold it, then I'm going to take it short because I think it's going to tank again. If you notice here, let me just zoom in here. This is a 10-day period. I mean, you could look to see. You see how this is kind of like the support level, this level right around here, which is the low here is like 873. So, I mean, if you want, you can add another alert to say, if it breaks below 870, you can take it short as well. I didn't really think to do that, but we'll put another alert, and we'll say 870. So we'll say currently is at 891. We'll say if holds 870 by the dip, or short the rejection. of 870. Yeah, because that seems to be like a key support level. All right, over these last 10 days. Not necessarily yesterday so much, but over the last 10 days it has been. So I think it's a good key level. So if it can't hold 870, you can potentially see a nice wash again. So we'll see. All right, so that's the first stock. So we got our key levels to potentially go long. If it holds 870, if it breaks below 70, short it. 870, it's a potential short, at least to this next level of 828. And you can see this is Fibonacci here. If it can hold 870, you could potentially take it long. And I think a key level here to be mindful of is that 918 level. Okay. All right. So next up, DWT. This stock that has had 1, 2, 3, 4, 5 green days out of the last 6 trading sessions. I have some key alerts here just because of where the chart is. As you can see, after hours, it was still trading on Friday, but it's a key level here, 1415. I think if it can't hold the 1415 level, then you can potentially take it for a nice wash all the way down to about that 1390 level. And it could potentially be a dip by there, or you could potentially dip by it at the 1376 level, because it's another key support level. So I'm looking at those key levels for potential trades. Let me just show you here. It's hard to see on the 1 minute time frame. You can't. It kind of like blocks it out. But if you look here, these are the. Let me zoom in some more. These are like the key levels here. So let me see. Why it's giving me such a hard time? Yeah, so here it is. Here are the key levels. So here's a key support level, and right over here is another key support level. So these are what I'm looking at. That's all I'm looking at, guys. Potential support and resistance. Now, I didn't add it here, but in theory, if it got up to this 14, let's say if it got up to about this 1453 level, which is right around here. We can put an alert here to say, let's say if it gaps up to 1453, we can say short rejection. Short rejection, 1453 level. Apparently can't spell. Or dip buy if hold support. Now remember, I always say this again and again and again and again to drill it in your head that let's say it gaps up when the market opens and it broke above 1453 at some point, you don't buy it when it breaks above 1453. You want to see it break above, pull back, and hold. At some point, find support at this level, and then you go long. All right. So I don't know what's gonna happen tomorrow, but we'll see. I just like that it had like key support and resistance levels to potentially make trades off of. That's why I picked the stock. Next up, MAT. This is another stock that trades with range, and I know it well. So if you look, this is over the last 10 days, it's been trading in this range from the 1755 range to about this $15 range. So if tomorrow if the Dow is shitty, I expect this thing to tank. Right here, this is a key support level at the open. I mean, at 1724, in theory, you could take a trade right off that 1724 level if you wanted, if you saw a gap down at the open. I picked the safer levels here. So if you look at MAT, I picked the key level here, 1710. So, 1710 and then 1703. These are the key levels here. So if it, let's say it tanks and it holds that 1710 level, you can dip by it. If it doesn't hold the 17 that level or the 1703 level here, you can short it. And then the next area of support really would be that 1687 level. And these are the Fibonacci levels here. And these I love Fibonacci as well. I don't put alerts there, I just watch for it. So that could be, so if it goes the other way, if it gaps up, it could potentially find resistance here, 1742. If it can't break above it, then you short, risking 1742. If it breaks above 1742 but can't break the 1755 level, you can short it, risking that. Now if it breaks above 1755 and it holds, then you can go long. All right, because if we look at the yearly, the daily, the stock, it was as high as $26 at one point. Do I think it's going to get there again? No. And it has on the daily, the 200 simple moving average is 1792, so that's a key level in the event it starts gapping up. But I don't. I mean, if the Dow is down tomorrow, I think this is going to give back a lot of those gains. But we'll see. We'll see. CLTY is up next. Now, this is choppy, and normally I wouldn't even put some shit like this on my watch list. The only reason why it's up here is because it has this crazy gap to fill below. And if you look at the stock history over the last year, this stock has filled gaps below. So you see how it had this gap here, fills it below down here, kind of comes all the way down, gaps up here, gets all the way up. And it hasn't filled that gap yet, but it did here. So, you know, there's a gap, that's called the gap fill strategy, where, you know, eventually stock usually, not always, fills a gap. But, you know, it's up. It's kind of, you see these two key levels here at 2025 and 1882. Those are the key levels that I would look at this stock, because this is a very choppy stock. You know, like me, I would probably trade this like a stock. Like if I saw it gapping up like this and it broke trend, and you see this is a 200-day moving average and it rejects it, I love to short stocks like that. But that's a little more complex, and you know, I don't want to encourage that if you're not real comfortable trading. You know, for me, I'm comfortable with this kind of stuff, but this is real, you know, volatile. You got to be careful with this kind of stuff. But what I like about this, the chart, and why I picked it, was because you have a key level here. Let's look at the 10-day, because it's a lot cleaner to look here. You have two key levels, 2025, right, which is the high. I put it a couple of cents below because I want to see if it gets back up to that level. I want to see if it's going to break above it and hold it, and then I can take it long, or is it going to get to that level and get rejected so then I can take it short. And then the other key level that I would be looking at this as, because it's so choppy, would be that, let me zoom out, would be that 1882 level right here. So if for whatever reason it tanks, I'd be looking to see for a potential dip buy if it got down back to 1882, or if it broke below it, I would take it short, because I mean, once it breaks 1882, I mean, look at this. The gap to fill below a high of this is 1766. So if we have a red day tomorrow, I mean, this can potentially tank. I don't know. We'll see. But you notice that I have key support levels, and the reason why people lose more of their money is because they just start trading just to trade. If the setup ain't there, if it's not near a key support level, you know, key level where I'm risking the risk off, I'm not going to take the trade. I'm just going to sit back and not trade. Sometimes the best trade is no trade at all. Next up is DRE. DRE, I took this on because, you know, it's somewhat of a volatile stock. I've traded this stock before. You know, it's been as high as 30.14. You know, it's been beaten down, and it had its first green day. Now, you know, I'm looking at this because right now it is at 25.37. Okay, and if you can see, you know, if the stock can break, if it can't hold this 22.28 mark, I would short it. Okay, and there's really no real support, to be quite honest with you, until it's like at 24.98. All right, if it breaks above, or if it gaps up and it can't hold that 25.22 level, I would short it, risking off 25.22. Now, if it can get above it and it holds it, then I may take it long. We'll see. So, you know, to me, these are key levels, and it's just easy to make these trades, you know. Next up is VIRT. VIRT, you know, it's sort of right around this key support level of 27.60 if we look at the chart here. So if the market opens and pulls back and holds that holds it as support, I'll take it long. If it can't hold 27.60, I'll short it. Now, unfortunately, guys, you know, I don't, you know, a lot of times I'll give you a gem that's under $1, but because the Dow is so shitty and the market's so volatile, there's no real good trades, at least for a day trading perspective. Maybe you may find some for a swing trading perspective, but the stocks are so choppy that it, you know, there's nothing worth day trading in that range. So you got to adjust to the market, guys. You know, you might have to start trading higher price stocks. You know, but again, 100 shares, you know, can get you a couple of points. So don't be afraid to trade these high price stocks. I only looked up to $40, and there was so many charts, it just would take me too long. So these are the ones that I'm looking at. Doesn't mean that you should trade them. You may find better setups. It's all up to you. Now, just so you know that if it breaks 27.60, the next area of real support is 26.75. So you can get, nearly a point on VIRT if it breaks below 2760, potentially. All right, and then the low over here, the next support, the clear support levels is 2465. So if it gets down to 2465, which I have my alert, if you notice here, let me just zoom in a little bit, you're gonna know it's a clear support level, which happens to be around the 50% retracement level, and that could be a potential dip buy. All right, so that's what I'm looking at. And the last two are Twitter. So Twitter, I'm looking at it. If you see, it's trading in this range right in here, between $29 and $35. Right now, it's sort of like in this range. It looks like if I put let me put a trend line here. If I put a trend line here, and this is the 30-minute, 10-day, 30-minute time frame. It looks like this is one of those Foos 4 patterns where you get like it's like kind of gapping up. It's an ascending triangle. It's not really it's what he branded as a Foos 4 pattern, but it's really an ascending triangle. Now, the thing that intrigues me about Twitter is I think one of these big brokerages or hedge funds analysts said like they put a target price on Twitter of $50. That may drive the price of the stock up. So tomorrow you may see a run. But if the Dow is like getting crushed tomorrow, this may pull back a lot. But it looks like it wants to break out and run. So a key level for me here is 31.45. If it can get a break above 31.45 and hold, to me it can be a potential run. All right. Let's see, and then oh god. All right. And a potential right here, potential dip buy would be that 29.50 level. So if you notice here it has some clear support. The low here is 21.51. So I put 21.50 because that could be a potential dip buy, or you go long. So you got to look at longer time frames. I usually when I trade, I use the 2-day. I use a 2-day time frame because my Fibonacci's. I use a 2-day time frame to kind of, look to go long and short, sometimes using my Fibonacci. But, when I'm looking for key levels to trade, you got to look further back a lot of times, okay? So here, that's why I'm looking at the 30-minute, 10-day time frame to see. And you notice this is the key support and resistance level. So you just basically, those are your entries. It's that simple, guys. It's not rocket science. Don't save your money. You don't need to spend all this money on these gurus, You can figure this shit out yourself. Everything's on YouTube. And then the last stock is CBIO. CBIO had this, it's been on a tear, man, from $6 all the way up to $33. It's been on an insane run. CBIO is a biotech company. Pharmaceutical biotechs have been hot, just like wheat stocks and techs. And right here, the reason why I like this, not only because it's been on these crazy run, and you gotta expect that it's gonna have to pull back hard at some point, you think at least. But it has this key support and resistance level. So right now it's at about, it says here 31.30, but if you notice here, it closed at around $33. So I want to see it break above and hold 33.81 to go long, or to short the rejection around that area if it gets close to it. Or look at this key support level, right? So the key support level is 30.99. If it can break below 30.99, it can't hold it, then I would take it short, looking to see that next support level of 29.80. So you may see a nice you can get a nice pullback, and if it could break below 29.80, which I think it can, you may see it go down all the way down to about, I would say, to this level, about 28.46. So you can get a monster pullback tomorrow on CBIO, but we'll see. So these are the stocks that I have on watch. That's all I basically do, look at support and resistance and make trades off key levels. A lot of times, I'll trade stocks that weren't on this watch list if I see stocks moving in the morning based on news, But I'm comfortable doing that. The best way to trade, though, guys, for beginners is you build a watch list. You look at the stocks on your watch list. You build your key support and resistance levels, and you just focus on those stocks. Don't worry about whatever else is trading. That's my best advice to you. That's how you'll be much more successful until you become real seasoned. Then you can do like I do, look at a chart literally 20 seconds and just like know where you're gonna go with the stock. but you know, I'm much more comfortable with that. Again, this is the 50 simple day moving average, the 200 simple day moving average, and VWAP. I use that now. I mean, if you watch my earlier videos, I used to use like MACD and RSI. Not to say they're not, you know, helpful, but I've learned to just really focus on volume, support, and resistance, and I'm good with that. All right, so I hope you found this helpful, guys. Like, subscribe. Come on, guys, hit that like, man. Hit that like, subscribe, and share, retweet. All right, have a good evening.